Today I'm joined by Mark Sykes, M&A Director at Hornblower Business Brokers, and we're looking at what really makes a business attractive to a buyer, particularly in the IT and the managed services space. Many owners assume that strong revenue and profit is enough, but in reality, buyers look much deeper, and what they value most isn't always what you might expect. So, we'll explore what separates a highly desirable business from an average one, and how owners should think about positioning themselves if they're considering a sale. So welcome, Mark. Let's start with this. When a buyer looks at an IT or a managed services business, what are the key characteristics that immediately make it stand out?
Yeah, it's a really interesting space, and probably more than any other type of business in any other sector. What effectively buyers are looking for, they're buying essentially a stream of future income. That's the way that buyers very clearly look at this space. So the quality and the visibility of income is absolutely everything, and how they define that. There's a number of things that they look at. Very much the top of the list is the percentage of recurring revenue. This is very much a business model in a sector that is doing, routine things, supporting businesses, obviously with their IT, day in, day out. So the percentage of recurring revenue, but also how secure that revenue is and how contracted it is, which we'll certainly come on to later, is absolutely critical. So that's very much the first key thing that they look at. Linked to that, as I sort of alluded to a second ago, strong client retention is absolutely key. This is a space that is beautifully positioned to build long-term relationships, because companies become very dependent on their IT providers. The IT provider is completely embedded into the company. It has to be to support it effectively. So it should breed long-term relationships. There should be a low churn, and if there isn't, that will be a red flag to any savvy buyer in the space. So yeah, strong client retention, absolutely key. Gross margins, again, absolutely pivotal. Unfortunately, in this sector, one of the key challenges is that gross margins can be very variable, sometimes not to the fault of the business owner. And what I mean by that is that to build a business in this sector, you have to get into mobilization projects that can completely overhaul a company's infrastructure, IT infrastructure, and that indeed is what they want you to do, what they want the IT services providers to do. So getting involved in that is critical to start the relationship, and then you build the relationship from there by supporting their IT. And there's a very fine and important balance with an MSP in not doing too much project work at the expense of everything else. And because if you do, you inevitably shift a lot of hardware. You sell a lot of kit, a lot of computers and hardware, and that's very low margin. So that can bring your margin down, whereas pure support revenue is very, very high margin, because it just involves people, basically usually working remotely, and the business charges accordingly. So strong gross margins are absolutely critical. And if a company's got a low one, a buyer will be all over that, looking at the reasons why. Are they underselling their services, etc. So probably come on to that point and expand on that point a little bit later. So yeah, margins are absolutely key. The size of the customer base, absolutely critical. If a business has a relatively small customer base, and then almost inevitably, if it has high revenue concentration between the top customers, that is a red flag, because that increases the risk for any buyer. So the size of the customer base and revenue concentration will be a key factor. And then the other key area, which is a bit of an umbrella, is just how well disciplined the businesses run internally, and how the processes are mapped out. So the core infrastructure, it's usually very, very strong in this sector. There's something about IT business owners which, that they are disciplined, they are sort of well structured in their thinking. But it's still a very key area that any savvy buyer will look at, because if the business is not too large, there is a risk in buying any business. So if the internal processes are well documented, that will give great peace of mind to any acquirer. So I would say those are the key things. I think they all wrap up into the fact that buyers are looking for visibility and scalability from day one, and all of those things that I've just covered really add up to all that.
Yeah, all makes sense. And inevitably connected to everything you've just said, my next question, where do you most often see businesses fall short of what buyers are really looking for?
Yeah, they again, it's a bit of a short list, depending on the size of the business. But I've still seen relatively large businesses, well, £2-3 million turnover businesses, who haven't addressed this. A lot of them don't deal with the dependency on either the founder or founders, or the sort of key technical individuals within the company. So if there's an over reliance on a few people, particularly if it's the business owners, the shareholders are going to leave the business, clearly that's a red flag. So that's unfortunately in this, because there's something about business owners in this sector. They're always technical people. They have to be. They've usually come up from the shop floor and been involved in the actual day-to-day support, and they might still be. And that becomes a problem when you're selling the business. You've got to distance yourself from that and start sharing the key relationships and the key responsibilities. And because business owners in this space do love what they do, then quite often they find that a bit challenging. So that's one key area where they fall short.
To what extent does recurring revenue drive value in this sector? You've referenced it earlier on as one of the elements that's important. And how important is the quality of those contracts?
Yeah, very, very important to the first part of the question, and very, very important in terms of the second part of the question. Recurring revenue, the percentage of it, the percentage of the whole revenue is literally one of the first metrics that any buyer will look at, and anything less than 50% of the total revenue mix will make people feel a little bit uncomfortable. Anything north of 65, even 70% of the revenue mix would be seen as highly desirable. So that's the sort of range. But it's not just about looking at how much the revenue recurs, if you like. It's to the second part of your question. How is it locked in? And that's all about contracts. And the quality of contracts in this sector is absolutely critical. And again, it sort of mystifies me a little bit that some business owners, it doesn't mystify me because I understand the logic, but a lot of them will say, for example, that we're almost not comfortable trying to tie our customers down to long-term contracts because we're only as good as the service we provide. And indeed, these same companies will be able to demonstrate that they've had long-term relationships with their customers, no churn. That's all great, and obviously from a customer perspective, the philosophy of we're not going to tie you into a long-term contract because we don't need to. We're that good that we'll carry on. Is all very it's built on good principles. However, when it comes to selling a business, you will not convince a buyer to ignore the risk of transitioning ownership of a business. And and then it brings other factors under the microscope, like if if the business owner or owners are very front end involved in their business still, and they are the main customer contact, then that will be an issue. So it's business owners must focus on getting into solid contracts with their customers. Very typically, those contracts are at least for 1 year. But the best and most valuable businesses in this sector take the bolder step to try and extend for 3 years, or somewhere in the middle, obviously 2 years. And again, it's easy to convince yourself that it's too uncomfortable to go and ask for a 3-year contract, but it's really not, because the customers are dependent on you. You are providing a quality service, and a customer will respect the fact that you've got to, even if you're not planning to sell the business, you've still got to plan your resources, plan your expenditure for that business going forward. So it's a bit of it's an issue of mutual respect that a customer should be
Continuity.
able to, yeah, absolutely. And it's amazing, if if a business hasn't managed to work on the contracted discipline, when they actually try to start introducing contracts, it's never as difficult as they imagine it's going to be. And a business that has all its customers on contracts in this space will sell for much higher multiples for fairly obvious reasons than one that just relies on its reputation and doesn't have contracts. And I've seen some companies, that go to a halfway house and they have the contracts, but they'll still put a 1 month notice period within the contracts. It's meaningless, really. It just defeats the object. So the quality of contracts is everything, and that really underpins the whole value of recurring revenue. That recurring revenue really is the gold standard, and it must be on contract. There's a couple of other factors that are worth mentioning, like low churn again is all important. So obviously the churn is going to be lower by definition if you've got people on quality contracts, particularly if they're 3 years. A contract by definition will enable you to work with your customers on a longer term basis and typically increase the revenue over time, because within a contract framework, it's much easier to have discussions about what further services you can provide to your customers. So it all locks together if you're on a contracted basis with your customers, whereas it all feels really quite flimsy by comparison if it's just kind of a day-to-day relationship. It really is critical.
How much does reliance on the owner impact desirability, and what do buyers want to see instead?
Yeah, it certainly does. Any business owner in this sector who is proud of the fact that they're still the main person in terms of customer interface and the sort of the proud front end person of the business is going to find themselves short when it comes to actually selling the business, and the perception that will give buyers, because buyers are looking for completely the opposite, if anything. And to start planning for this, literally 2 or 3 years out from even thinking about selling the business is absolutely critical. So what buyers are looking for is, at the very least, shared relationships between the business owners and the key staff. They do not want to hear that every time the most serious IT problems that the business will manage for a client always end up with the business owners. They want to know that there's structured layers of staff within the MSP that will deal with all of those problems, even the big serious ones, and that the business owner doesn't have to get involved with the big serious ones. So yeah, that shared responsibility for customers is key, and shared responsibility for the problems that the business manages is absolutely key. And the simplest definition of success in this sector is if the business owner should be able to walk away and spend weeks and months away if they could do and want to do, and still have the business ticking over day to day. So it's key that the business owner detaches themselves and has that second tier capability and some sort of succession plan that he's working towards, at the point that he does want to sell the business.
Yeah, agreed. And finally, for an owner thinking ahead, what practical steps can they take to make their business more attractive before going to market?
Yeah, well, certainly start with a clear understanding and acceptance of where the business is at in terms of succession planning, and if there is no person or group of individuals who are truly sharing the day-to-day accountability for running the business, start working on that now. And if it's feasible to have a leader of the business in waiting, an MD in waiting, or at least a senior operations person, make that clear, start promoting that person, and start working on that succession plan. So that's absolutely pivotal. Recurring revenue, have a clear understanding of what percentage of your revenue it actually relates to, and then lock in the contracts around that. And if you're 2 years out from an intended sale and you've got a lack of contracts in your customer base, start working on that now, and start working on it on a 3-year basis, because you've got the time to transition to a full set of customer contracts. That's absolutely key, and that's going to increase the value of your business significantly. And then make sure you have full transparency around the key metrics for an internal disciplines for how to manage your business. Make sure you could show those systems and processes to anybody on any given day, and give clarity about how it all works, and works without you needing to be involved. Getting back to my earlier point, at every stage. So have that whole clarity around the metrics. Have clarity and efficiency with your internal processes. And you can't fix any of these things overnight, which is why your question's so relevant, about planning in the sort of medium to long term. None of them are difficult to plan and implement on a medium-term basis. And the impact on value that all of them, or to be frank, any of them would have over that period, and when it comes to the point of being able to sell the business, will make it well worth it. So that there's little doubt that the businesses that achieve the strongest outcomes in this sector are the ones that have already built predictable, contracted, scalable revenue streams before going to market, and all of the factors that we've just discussed are all key elements of that. So not everything can be fixed, and everything can't be fixed quickly, but the majority of things can be over time, and I would argue that all of them can, with the right and appropriate amount of time and planning to actually work towards the point of exit.
Great. Well, thank you, Mark. I'm sure these are really valuable insights to most business owners out there. And if anyone would like to get in touch with us to reach out and understand how Mark and Hornblowers can help, then do by all means please get in touch. Thank you.
Thank you.